Hello and welcome to Mullen's Benefits Companion, a podcast that helps employers navigate the complex legal challenges of managing their employee benefit plans. I'm your host, Brydon DeWitt, and today I'll be discussing some post-COVID cleanup issues. Suffice to say, it's been quite an interesting couple of years with 2020 and 2021 and dealing with the pandemic. And last year can really seem a little bit like a blur if you're an employee benefits specialist. If you recall, in the first quarter of 2020, in January and February of 2020, the big news that we thought we were going to be addressing was the Secure Act. The Secure Act was one of the most significant pieces of benefits legislation in 20 years. And we thought, here at Mullen, that that's really the focus was going to be over the next year, was going to be on the Secure Act. And we started meeting with clients and ramping up to focus on the Secure Act. And then around mid-March of 2020, the pandemic hit and we had shutdowns and we had a rapid flow of legislation, the FFCRA and the CARES Act and guidance from the IRS. And we really had to do things on the fly and to respond to the pandemic, take care of our employees, take care of our plan participants. And there were just rapid changes occurring. If you recall, back in 2020, the IRS came out with guidance that relaxed the, hard and fast cafeteria plan rules that restrict employees' ability to make changes to their cafeteria plan elections and their flexible spending arrangement elections. And they also released the restrictions on the use it or lose it rule that we all live by with health flexible spending arrangements. And so employers had options last year during the pandemic to allow mid-year election changes to add or drop or decrease or increase FSA contributions, to add or drop health insurance, or to change a group health insurance election. Age limit for dependent care spending arrangements was increased to age 14. And so we had all of these changes with health FSAs and cafeteria plans, and employers, and sometimes in response to employee requests and demands during the pandemic, were allowing these changes to occur in accordance with IRS guidance. And then at the end of 2020, with the Consolidated Appropriations Act, a lot of these changes were then extended into 2021, where employees could roll over unlimited amounts from 2020 to 2021 in their flexible spending arrangement, or they could have a grace period to file claims until the end of 2021. So all of these changes occurred, and we were on the fly responding to them and allowing employees to make elections. And now that the dust has settled and we're looking back on 2020, it's important to realize that our plan documents still have to reflect plan operation. And in the IRS guidance and in the Consolidated Appropriations Act, we have until the end of the 2022 plan year to make, or by the end of 2022, to actually amend the plan. So it's important to know what you did, now that the dust is hopefully settling with the pandemic, and looking back over the last 2 years and making sure that plan documents are timely amended to reflect what was done during the pandemic. The same is also true with CARES Act changes for retirement plans. So as you may recall, with the CARES Act, there were permissive coronavirus-related distributions. These are optional provisions for plans to adopt that allow employees to take a distribution of up to $100,000 from their 401k account. Normally with a 401k plan, unless you've terminated or died or been disabled or had a hardship reason, you really can't get money out of your 401k plan. But under the CARES Act for 2020, participants were allowed to take up to $100,000 out of their plan. Also, there was plan loan relief. The plan loan limit was increased from $50,000 to $100,000, or 100% of employees' account balance. So there were changes also with retirement plans and 401k plans in particular in 2020 that you may have allowed employees to do. You may have allowed, employees may have been under financial stress because of the pandemic and demanded that you allow the coronavirus-related distributions, for example, or maybe they were going to default on a plan loan and you allowed them to have the relief from plan loan default under the CARES Act. These things may have been done in operation, but it's important now to go back, figure out what was done, make sure you kept track of what was done, and amend plan documents by the end of the 2022 plan year. So here we are in the fall of 2021, looking ahead to 2022. Now is the time to make sure that these things are lined up and that plan amendments can be adopted by the end of 2022. And then going back to the first thing we were talking about, the Secure Act. So all of the changes in the Secure Act, the mandatory and permissive changes under the Secure Act that went into effect, those amendments are due by the end of 2022. So next year is going to be a big year of cleaning up and catching up and documenting and making sure plan documents reflect what happened during the pandemic, and then also that they reflect the Secure Act. So that'll wrap up our discussion for today. If you have any questions about future episodes of this podcast, please contact me. You can also visit our employee benefits page at williamsmullen.com/employee benefits. There you can find out more about our team, as well as past episodes of this podcast and legal alerts. Be sure to subscribe to this podcast to be notified when our next episode posts. Thanks for listening.